Bill Gates is, in a new way, calling for another D-Day. Bill Gates says there's a strong argument we're about to see a global economic slowdown. It seems like recently, if Bill's in the news, old Bilbo Baggins here, he's either calling for a D-Day, either in more of the market, or if he's saying it with the virus, or it's just like more of the awkward commentary he had when he was being asked about Epstein. I don't know. It feels like ever since his divorce, his PR team has not been doing the best. But anyway, let's dive into why old Bilbo here, not the most jolly about the market. When it comes to the fate of the global economy, Bill Gates is siding with the bears. The bears. Gates was asked how he sees the war in Ukraine affecting the global economy over the next few years. It comes on top of the pandemic where government debt levels were already very, very high and there were already supply chain problems. It's likely to accelerate the inflationary problems that rich world economies have and force an increase in interest rates that eventually will result in an economic slowdown. I'm afraid the bears on this have a pretty strong argument that concerns me a lot. You know, it's easy to kind of poke fun, and like obviously our boy Elon has been doing that lately, but with this, it's kind of hard to disagree with him because in this scenario, yes, we have supply chain issues. On the supply side, the Fed can't control anything. They can control demand, and they're trying to lessen demand by raising interest rates, but then you have to look at what's going to go on in the economy. Is there going to be an economic downturn? And some people who kind of know what they're talking about are saying, yeah, this is something that you have to be not only prepared for, but strongly considering. The S&P 500 could fall another 28% before this historic sell-off is over and markets start bouncing again, according to the Bank of America. Now, this is interesting because most banks and firms such as this, they like to be a little bit more shy. Like they don't want to scare away customers or the general public or anything like that. So to come out with this type of a headline, I mean, that's a noteworthy drop, 28%. It's a little bit interesting to say the least. Past performance, no guide to future performance, but if we were today's bear market ends on October 19th, 2022, with the S&P at 3,000 and the NASDAQ at 10,000, the S&P 500 would need to fall an additional 28%, while the NASDAQ would have to drop an additional 18%. So those are large percentage sell-offs. I don't know if I would go personally to this extreme of a nature. And to me, that's more of like a medium to long-term type of a call out. I like to play it level to level. Every single day, every single week, I'm like, what's the next level of support, resistance? Are we breaking down or breaking out? And then I play in the next tranche. If you want to do this, I guess that's more of a medium term thing of like, okay, here's where we're going. I'm going to make this play. And then I'll come back in a couple months to see if I'm right. Have at it. That's just not particularly my style for right now, just because there's too much opportunity in the very short term. In the long term, I'm still going to be a parable. I mean, that's markets in the long term. There's a very fair argument that, hey, that's just your opportunity to dollar cost average. Are you most likely going to bottom ticket? No, I wouldn't focus on that. It's just when you see a nice discount on either the equities, the crypto that you like, you dollar cost average, and if it's a long term, great, you're coming back in a couple decades anyway. You still need to know what's going on to maybe better time your dollar cost average. Right now, I'm not doing any DCAing in my long-term account, at least not yet. I'm looking for a little bit more downside. China's slowdown means there's no way Beijing will hit its growth targets, so don't rely on it to cushion the world against recession, according to some fancy schmancy economists. So it's not just in the US, it's not just in Europe, but we're also seeing it in Asia. I don't think we're really through the gauntlet quite yet, but obviously every rainstorm is gonna eventually end. So there's just not a time, there's no need to panic. I honestly think it's a bit silly, and I think it's easy for mainstream media and headlines like this to get a little bit of that fear mongering because it's the emotional pull. I mean, you even see it on YouTube. I mean, hell, I participate in it because it's how you get people to click. But at the end of the day, you should feel confident in your skill set that you could play in either direction and understand that right now, just know what the trend is. The name of the game when it comes to the markets is you make money knowing the appropriate trend. If you're fighting the trend, you're going to get chopped up. You're going to lose money. Right now, it's as simple as this. The trend's to the downside. As soon as we see some bottoming signals, cool. You take your money and you switch to the other side. I think if you boil it down to just that easy of an argument, you'll feel more comfortable and you'll take some of the emotion out of whatever your decisions are.